Hi, everyone. I'm back again today. Wanted to show you a chart that talks about asset class returns and how random they are over time. And because it's January, this is a popular time of year where asset managers and economists like to forecast about what they believe will be the returns of different asset classes in different countries, where you should position your investments. And these are really interesting to read. I find it super interesting to see what the different forecasts are going to be from on a year-to-year basis. But the point of today's video is to talk about how accurate can those forecasts actually be. And what I want to do is show you a couple of visuals just to give you an idea of how random the performance of different asset classes in different countries' stock returns can be on a year-to-year basis, just to illustrate how difficult it can be to forecast effectively. So I'm going to show you my first chart here, which has along the side here, it's different asset classes. So it starts with Canadian fixed income, then it talks about Canadian stocks, US stocks, and international stocks. And within those groups, there's some sub-asset classes too. So there's large cap, relatively cheap or value stocks, and small cap stocks. And the chart on the bottom shows you the returns on a year-to-year basis. But really the point of this visual is to look at the top of the chart, which shows on a year-to-year basis the highest returning asset class to the lowest returning asset class for each individual year. And there's certainly a lot of numbers in this chart, but the big takeaway is that the performance of asset classes on a year-to-year basis is incredibly volatile. It moves around quite a lot. You probably can't see a discernible pattern in the way that these returns unfold on a year-to-year basis. And so the idea that in January or at the end of the year, we might be able to reposition our portfolios to capture the returns of the asset class that's going to give us the highest return in the next period and do that successfully every year, year on year, it's just not very reasonable for us to expect that. And so, I think that when people provide forecasts, I think they know this too. They know that forecasting is very hard. And so the point of this chart is to just reinforce, yes, it is incredibly hard to forecast. The returns of asset classes across the world in markets are very, very difficult to forecast and to know in advance what to do. And so the advice for investors would be, pick an asset allocation that has you positioned in each of those places. So in Canada and the United States, internationally, has exposure to large cap stocks, small cap stocks, and value stocks. Spread those out, remain diversified, and keep rebalancing. That's really the best way that I believe that you can capture the returns of all these asset classes. You can do it in a very low cost manner, and you don't need to rely on the forecast of economists or asset managers to be correct every year. And then one of the great benefits of that approach too is you can kind of relax. You know that on a short-term basis, the returns of markets and different asset classes can be quite random. And that gives you sort of some freedom to just sort of take a deep breath and relax and say, hey, I'm spread out all over the globe. I'm maintaining a very low-cost portfolio that's rebalancing constantly, and just take some of the worry out of that day-to-day experience as an investor. So I hope that you found this video helpful. Put any comments or questions below in the comments section, and I will speak with you next time. Take care.